Have you ever wondered how the stock market works? Well, let's dive right into it. At its core, the stock market is a public marketplace where shares of publicly traded companies are bought and sold. Think of it as a grand auction house, with buyers and sellers constantly negotiating prices. But why does it exist, you ask? Simply put, companies use the stock market to raise money. They do this by selling a portion of their ownership in the form of shares. On the flip side, investors buy these shares with the hope that the company will grow, and their investment along with it. This constant trading of shares has a profound impact on the global economy. It's a reflection of business confidence and consumer sentiment, driving economic growth and sometimes contraction. So, the stock market is essentially a marketplace for buyers and sellers to trade shares in publicly traded companies. And that's just the tip of the iceberg. Let's delve deeper into this fascinating world. But where did all this start? How did the stock market come into existence? Let's journey back in time to the 17th century, to the bustling city of Amsterdam, where the concept of a stock market was born. Here, the Dutch East India Company, in a bid to fund its voyages and spice trade, issued shares to the public, creating the first stock exchange, the Amsterdam Stock Exchange. Fast forward to the late 18th century, across the Atlantic, the New York Stock Exchange was established, marking a significant milestone in the history of the stock market. The NYSE, as we know it today, was initially a gathering of 24 brokers under a buttonwood tree. This humble beginning would later transform into the world's largest stock exchange. The stock market, however, hasn't always been a smooth ride. The Great Depression in the late 1920s was a dark period marked by a massive stock market crash. This economic downturn was a stark reminder of the market's volatility and the risks involved in stock trading. Then, moving on to the late 20th century, we witnessed the dot-com bubble. This era was characterized by a rapid rise in equity valuations fueled by investments in internet-based companies during the tech boom of the 1990s. The bubble eventually burst in the early 2000s, leading to a market correction. Through these highs and lows, the stock market has played a pivotal role in shaping economies and influencing financial trends globally. It's been a platform where companies raise capital for growth and where investors, big and small, have created wealth, albeit with varying degrees of success. Today, the stock market is a complex, interconnected global network of exchanges and markets, all powered by lightning-fast technology and monitored by regulatory bodies. It's a testament to human ingenuity and the power of collective investment. The stock market has had its fair share of highs and lows, but it has always bounced back, proving itself as a resilient entity. It's a fascinating world, filled with opportunities and challenges, and it continues to evolve, reflecting the changing dynamics of our global economy. So you might be wondering, how can you participate in this marketplace? Well, to begin with, you'll need a brokerage account. This is essentially a platform through which you can buy and sell stocks. A brokerage acts as the middleman between you and the stock exchange. There are many online brokerages available today, with services ranging from basic trading platforms to more comprehensive financial advice and management. Now let's talk about the types of stocks. There are primarily two kinds: common stocks and preferred stocks. Common stocks are the ones most people think of. They give shareholders voting rights at shareholders' meetings and the right to receive dividends. On the other hand, preferred stocks generally don't have voting rights, but they have a higher claim on assets and earnings. This means that preferred shareholders will get their dividends before common shareholders. Another factor to consider is company size, often referred to as market capitalization. You have large cap, mid cap, and small cap stocks. Large cap companies are typically more stable but may offer slower growth. Small cap stocks can provide higher growth potential, but they also come with more risk. One of the most important principles in investing is diversification. It's essentially the old saying, don't put all your eggs in one basket. By spreading your investments across a variety of stocks, you can help mitigate risk. If one stock performs poorly, the others may still do well, balancing out your overall returns. But remember, each stock represents a piece of ownership in a company, so it's crucial to research and understand the business you're investing in. Look at their financial health, market position, and future growth prospects. Moreover, keep in mind that stock prices can be volatile. They can rise and fall based on a multitude of factors, including economic indicators, company earnings reports, and broader market trends. Therefore, investing in stocks isn't about making a quick buck. It's a long-term commitment. Remember, investing in stocks requires careful research and planning, but it can be a great way to grow your wealth. Now that you know the basics, where should you invest and what should you invest in? That's a question that's as unique as you are, because the answer depends on your individual financial goals, your risk tolerance, and your interests. There are plenty of platforms where you can invest in stocks. Traditional brokerage firms offer a wide array of services, from full-service brokers who handle all your investment decisions to discount brokers where you do most of the work yourself. Then, there's the new breed of online platforms and apps, which have made stock investing as easy as ordering a pizza. Each has its pros and cons, so it's important to choose one that aligns with your needs and comfort level. As for what to invest in, the world is your oyster. The stock market is a vast ocean teeming with opportunities. But remember, it's not wise to put all your eggs in one basket. Diversification is key. Investing in different sectors and industries helps spread risk. Think about it like a hearty soup. You wouldn't just throw in carrots, right? You'd want a mix of ingredients, carrots, peas, potatoes, chicken, to create a delicious, balanced meal. The stock market works in a similar way. You might consider investing in a mix of sectors like technology, healthcare, finance, or consumer goods to create a diversified portfolio. And don't forget about blue-chip stocks. These are shares in large, reputable companies that have a history of stable earnings. They might not offer the thrill of a hot new startup, but they provide a steady foundation for your investment portfolio. Remember, investing is not about chasing the latest trends or getting rich quick. It's about building wealth over time. And that takes patience, discipline, and a well-thought-out strategy. So, take your time, do your research, understand the companies you're investing in, and most importantly, make sure your investments align with your financial goals and risk tolerance. Because at the end of the day, you're not just buying stocks, you're buying a piece of a business. Choosing where and what to invest in is a personal decision that should align with your financial goals and risk tolerance. But what can you expect to gain from investing in stocks? That's the million-dollar question, isn't it? Well, the answer is quite simple. The benefits are potentially enormous. Let's break it down. One of the most immediate benefits is income through dividends. When a company is profitable, it may choose to distribute a portion of its earnings back to its shareholders in the form of dividends. This provides a steady stream of income that's separate from your regular paycheck. Think of it as a bonus that keeps on giving. Next, there's capital appreciation. Over time, the value of your stocks can increase, leading to a higher net worth. This is the essence of buy low, sell high. If you've chosen wisely and the company you've invested in thrives, your initial investment could grow exponentially. Just imagine being an early investor in a company that becomes the next tech giant. But perhaps the most powerful benefit of investing in the stock market is the magic of compounding. This is where time becomes your best friend. The longer you leave your money in the market, the more opportunity it has to grow. Your earnings from dividends and capital appreciation are reinvested, and they too can earn returns. It's like a snowball rolling down a hill, gathering more snow and growing larger as it goes. Now keep in mind, investing in the stock market is not a get-rich-quick scheme. It requires patience, discipline, and a willingness to weather the occasional storm. There will be times when the market dips or even crashes, but history has shown that it always recovers and continues to grow over the long term. Remember, investing in stocks is about building wealth for the future. It's about securing a comfortable retirement, helping your children go to college, or even achieving financial independence. So while it may seem daunting at first, the potential benefits make it an endeavor worth considering. Investing in the stock market can be a powerful tool for wealth creation, but it requires patience and discipline. So are you ready to start your journey towards financial freedom? In conclusion, the stock market is a complex yet fascinating world. We've voyaged through its rich history, seeing how its ebbs and flows have shaped economies and lives. It's a dynamic entity, one that began centuries ago and continues to evolve today. We've also delved into the basics of investing, shedding light on the process of buying and selling stocks. We've explored different investment avenues and offered a glimpse into the diverse range of stocks you can invest in. It's not just about making a quick buck, but strategically building a portfolio that aligns with your financial goals. The benefits of investing are manifold. Not only can it provide a source of income, but it also holds the potential for long-term wealth creation. It's about understanding market trends, making informed decisions, and patiently waiting for your investments to grow. Understanding the stock market and investing wisely can be your ticket to financial freedom. So, are you ready to take the plunge?